Today's cryptocurrency landscape is bustling with significant market shifts and regulatory challenges. From Bitcoin's macro-sensitive rally to BlackRock's innovative ETF, the crypto space is evolving rapidly. Here are today's top 10 stories you need to know. Regulatory challenges remain a constant concern for the cryptocurrency market, even if they aren't always in the headlines. Recent news from India indicates a ban on Telegram for digital asset discussions, highlighting the ongoing scrutiny faced by crypto exchanges and assets. This regulatory oversight can create a chilling effect. In the latest developments, crypto-linked stocks have surged significantly, fueled by SpaceX's impressive financial performance. This increase is drawing attention from both retail investors and seasoned crypto traders, highlighting a growing convergence between traditional equity markets and cryptocurrency trading. SpaceX's reported holding of over 18,000 BTC on its balance sheet, particularly following its IPO, underscores the deepening ties between these two financial sectors. As tokenized equities gain traction, they are transforming how investors perceive and interact with assets, effectively blurring the lines between cryptocurrencies and conventional stocks. This trend not only reflects a shift in investment strategies, but also raises critical questions about regulatory frameworks and market stability. Looking ahead, analysts suggest that as more established companies embrace digital currencies, the landscape of finance may undergo a fundamental transformation, paving the way for innovative investment opportunities. The cryptocurrency market is witnessing a notable resurgence in speculative trading, particularly with coins like Zora and Vine capturing investor interest. Recent data reveals that Vine surged by an astonishing 86% in just 24 hours, while Zora experienced a slight decline. This volatility underscores a growing trend among retail investors who are increasingly drawn to fast-moving narratives in the crypto space. Historically, such behavior can inject significant liquidity into the market, but it also heightens the risk of abrupt market reversals. As seen in previous cycles, smaller cap coins often exhibit extreme price fluctuations, posing substantial financial risks for investors unprepared for sudden downturns. Analysts suggest that while the excitement around Zora and Vine may attract attention, the sustainability of these trends remains uncertain. Looking ahead, market participants should closely monitor these developments to gauge whether such speculative narratives can maintain their momentum or if a shift back to more established assets is imminent. Ethereum continues to hold its position as a primary benchmark in the cryptocurrency market, despite facing recent downward pressure. Over the past 24 hours, data reveals that Ethereum experienced a slight price drop of 0.3%, reflecting a broader trend where traders are shifting their focus towards higher beta assets that promise more aggressive growth potential. Historically, Ethereum has played a pivotal role in shaping market trends, often seen as a bellwether for the entire cryptocurrency landscape. Its smart contract functionality and widespread adoption among developers contribute significantly to its influence. The recent capital rotation indicates a more risk-on approach from investors, which could lead to increased volatility in the market. As Ethereum's price movements are closely watched, its ability to regain upward momentum will be vital for maintaining investor confidence. Looking ahead, developments such as upcoming network upgrades and regulatory changes will be crucial in determining Ethereum's trajectory and its potential to reclaim its previous highs. XRP is making headlines as it leads in real-world asset flows, outperforming competitors like Ethereum and Solana. Recent reports indicate that XRP has attracted $1.9 billion in inflows over the last 90 days, signaling a renewed interest from traders. This influx of capital is significant, as it not only reflects price performance, but also underscores XRP's resurgence as a viable settlement and tokenization network. The backdrop of regulatory clarity surrounding XRP has played a crucial role in this shift, allowing investors to feel more secure in their positions. Additionally, the rebound in derivatives activity, occurring without a major increase in leverage, suggests a healthy market sentiment surrounding XRP. The growing narrative around XRP emphasizes its potential to reshape the evolving landscape of cryptocurrencies, particularly in cross-border transactions. As XRP continues to capture attention analysts predict that it could solidify its position as a key player in the digital asset space, potentially influencing future market trends and investment strategies. Bitcoin miners are increasingly recognized as integral components of the burgeoning AI infrastructure market, prompting significant interest from Wall Street investors. Recent reports reveal that the perception of Bitcoin miners is shifting. They are now valued not solely for their block rewards, but also for their capacity to function as data centers and their strategic access to power resources. This evolution in valuation reflects a broader trend where the demand for AI computing resources surges, positioning miners to leverage their existing capabilities in this new domain. The implications of this shift are profound, as it could redefine how miners are assessed financially and operationally, blending cryptocurrency with advanced technology sectors. As Bitcoin miners diversify their business models to include AI-related services, they may enhance their profitability and sustainability. This transformation is poised to stir considerable discourse within both the cryptocurrency and tech industries. In the coming months, we can expect further developments as miners adapt to the AI landscape and explore innovative partnerships that could reshape their future. BlackRock has recently launched a groundbreaking Bitcoin ETF that incorporates a covered call strategy, providing investors with a unique opportunity for monthly income while simultaneously capping potential upside gains. This innovative product design is particularly appealing to those who seek exposure to Bitcoin without fully embracing the inherent risks of price volatility. By structuring the ETF in this manner, BlackRock is targeting a wider demographic of investors who favor cash flow profiles over speculative market gains. This launch reflects a significant shift in traditional finance's approach to the cryptocurrency sector, as firms increasingly integrate familiar yield frameworks into digital asset offerings. The introduction of such products could stimulate greater demand for Bitcoin among institutional investors, potentially leading to increased market stability. As the cryptocurrency market continues to evolve, the performance of BlackRock's ETF will be a crucial barometer for institutional interest in Bitcoin and its long-term viability. Should this ETF succeed, it may pave the way for further innovations in crypto investment strategies, enhancing mainstream acceptance of digital assets. Bitcoin is undergoing a significant transformation as it increasingly becomes structured into yield and income products. This shift includes the development of decentralized finance, DeFi vaults, and innovative exchange-traded funds, ETFs, that offer monthly income features. Historically viewed primarily as a speculative asset, Bitcoin is now attracting investors who seek more than just price appreciation. This evolution reflects a growing demand for Bitcoin as a tool for portfolio construction and income generation, marking a pivotal shift in investor behavior. The implications of this trend are profound, as it may lead to a more stable and mature market, where Bitcoin is recognized as a legitimate asset class capable of providing steady returns. Institutional investors, in particular, may adjust their strategies to incorporate Bitcoin as a reliable source of income, diversifying their portfolios amid economic uncertainties. This could further enhance Bitcoin's legitimacy in traditional finance. As financial products evolve to accommodate this new paradigm, the future of Bitcoin as an income-generating asset is poised to redefine investment strategies, potentially solidifying its role in mainstream financial portfolios over the coming years. The investment firm Strategy has made headlines by purchasing an additional $100 million worth of Bitcoin, bringing its total holdings to over 846,000 BTC. This significant acquisition underscores Strategy's commitment to Bitcoin as a core asset, even as its financing model faces scrutiny. Founded in the early days of cryptocurrency, Strategy has been a prominent player in the digital asset space, advocating for Bitcoin's potential as a hedge against inflation. However, reports indicate that the yield on their Bitcoin holdings has dipped to 12.5% due to recent common stock sales. This decline raises concerns about the efficiency of their funding model and could influence how investors price leveraged Bitcoin exposure across the sector. The actions of firms like Strategy are closely watched by the market, as they often set the tone for institutional investment trends. If Strategy's yield continues to fall, it may prompt other firms to rethink their strategies, potentially leading to a ripple effect in the market. As they navigate these challenges, the market will be keenly interested in how strategies' decisions impact Bitcoin's price and investor sentiment. Ultimately, Strategy's future moves will likely shape institutional investment strategies in the coming months. Bitcoin's macro-sensitive rally is once again at the forefront of the cryptocurrency market as it continues to drive overall market sentiment. This rally is largely influenced by various geopolitical tensions and shifting liquidity dynamics, reinforcing Bitcoin's role as a key anchor for the entire market. Recent data indicates that while Bitcoin has shown notable resilience, the broader crypto market cap has experienced a decline of 1.97% over the last day, highlighting a lack of strong conviction among investors. This situation underscores the delicate balance between macroeconomic factors and the intrinsic value of cryptocurrencies. Historically, Bitcoin has acted as a bellwether for altcoins, which often find support during its rallies. However, the overall market breadth can remain weak if this momentum is primarily driven by external events rather than organic growth within the crypto ecosystem. Investors are left to ponder the sustainability of this rally and its potential implications for future market stability. The ongoing global economic uncertainties, including inflationary pressures and regulatory scrutiny, add layers of complexity to this landscape. Looking ahead, the market will need to assess whether Bitcoin can maintain its upward trajectory while navigating these macroeconomic challenges. Sustained upward movement may depend on renewed investor confidence and clearer regulatory frameworks that support the broader cryptocurrency market. Thank you for watching. Which of today's stories shocked you the most? Don't forget to like and subscribe for more updates.